Welcome back to Force Education. This is Ed. Today we're talking once more about SoFi. Now, SoFi here, SoFi Technologies, we've talked about it before. It's around a $7.6 billion market cap company with their mission is to help people reach financial independence to realize their ambitions. Financial independence does not mean just being rich. It means to a point, or it means to getting to a point where your money works for you for life, or the life that you actually want to live. Everything we do is geared towards helping our members get their money right. So they do have new information on their earnings. Now, I did talk about it extensively in my last video and some of what we're most likely going to be getting. We've seen a bit of volatility in the last few days, and currently it is hitting its around 52-week low. So what we're going to do is take a look a little bit into their earnings. Of course, there is or has been news about it, for instance, including the CEO, for instance, just buying stock, and as well as their earnings perhaps not being as nice as some people want it, as basically a mixed kind of earnings. But we're going to dive through it and then look a little bit further into what actually happened. So for quarter 4, 2021. The first thing you see is members in thousands, and we see a really nice increase in memberships. Now, it's not as high as we've seen before as the numbers keep getting higher, but the delta change is still nice enough. You're seeing new members is around 523,000. So that's an increase. That's the most it's seen in, ever. But the year-over-year growth is around 87%. So yes, it is a little bit lower than the 96 and 90, but in terms of the number of members that they're growing, that is the highest it's ever been. Now, we're just talking about issue of relativity, but honestly, as an investor, as long as I see member growth, it does not matter, for instance. Now, going on towards products, the products in thousands, you've seen as well a massive increase as well, 906,000, which is a 105% increase year over year. Now, the Galileo accounts as well has seen a bit of an increase, 67%. You reach now 100 Galileo accounts in millions. Now, lending products, and you see all over, for instance, the financial services products, those are also increased, which is a really nice thing to see. And financial services productivity loop has also been increasing. So right now it's sitting at 3.8 times the total fin service products, which is higher than what you've seen year over year multiple times. Before it was 0.5, 1.8. Now we're sitting at 3.8 times. Now the quarterly adjusted net revenue, you're seeing here 280 million. So an increase from the last quarter, just a little bit actually. So that's where a little bit fell down from some of the people's basically expectations. And the quarterly adjusted EBITDA has fell down to 5 million. This could be more of a seasonal thing, as you get to see here, but quarter 4 2020, that was 12 million before. So there is a significant drop in the adjusted EBITDA, but the net revenue has seen an increase year over year. So the adjusted EBITDA might have been the issue there. However, when you look into the annual adjusted net revenue, you're seeing a positive annual adjusted revenue of around $1 billion, which is amazing. And the first ever adjusted or annual adjusted EBITDA of 30 million. Last year was negative 45 or 45 million loss, and the year before 149 million loss. Now, how do they actually meet it in terms of results? Well, the adjusted net revenue is around 280 million actual. Their guidance was between 272 and 282 million. So you're able to see that they have actually met closer to the higher end of the guidance, which is really good. My expectations was they were going to beat it, but they beat it with a $3 million beat from the midpoint. But still, it's a little bit of a stretch there. It did not actually go above the guidance, so that's an issue there. In my own opinion, of course. Adjusted EBITDA is around $5 million, or sorry, $5 here in millions. And you're seeing that previously the guidance was between 2 and 5 million, and it actually was in line with the high. So that's a nice thing to see. So it definitely was on the higher side of the guidance. Now for the full year guidance, you're seeing here that the actual adjusted net revenue was 1 billion and 10 million. So 1,010 million in a sense. It's not mathematically correct, but you get to see it here. Now, between the lows and the highs, it's only around 2 million short from the high. So it basically was in line between the guidances. The adjusted EBITDA was around 30 million, again, very close to the 31 million on the high guidance. So it was in line with the guidance. Now, their 2022 quarter one guidance, you're seeing 280 to 285 adjusted net revenue. So basically, previously you had a bit of massive growth, but here you're seeing a little bit of a decrease in expectations, and the adjusted EBITDA being between 0 and 5 million. So it is a little bit lower than what you've seen before, and you get to see here in the quarterly perspective, you had 4 million. So quarter one apparently is a little bit of a tough, perhaps on their books. But when you're looking at adjusted net revenue of 216, you start seeing, yes, it is better than year over year. But again, we're kind of hitting in a bit of a plateau, and that might be a bit more shaky for some investors. Now, going on forward, you're able to see some of the financial supplements, some information that might be useful, but we're going to skip through that. And we're going to a little bit talk about some of the conferences. So they have a bunch of different conferences they will be doing in case you're interested to see them. And on March 3rd, they completed the acquisition of Technisys. And so this could be a part of where their books is getting a bit of a hit as they go ahead and try to scoop different companies. So Technisys is a unique strategic technology business that will be entering into the SoFi family, and it's basically a pursuit to provide the best of breed products as a one-stop shop financial services platform and complementing and enhancing the Galileo business. So they will build an AWS or Amazon Web Services of fintech. That's what they're trying to do. And the combined Galileo Technisys technology stack will create what is expected to be an only end-to-end vertically integrated banking technology stack, from user interface development capabilities to a customization of multi-product banking core and a ledger with fully integrated and processing card issuing available for SoFi products and Galileo Technisys partners. Now, in terms of the valuations, you're still seeing 1.62, so that's better in terms of price over book, but price over sales is 7.19, a little bit higher than the SP 500. Now, before moving on towards technical analysis, we don't see much difference in the big names of the institutional buyers. They're still holding, including Vanguard, SCH sponsor. And when you're looking into the just general buys of the institutions, you're seeing mainly bullish than bearish. Now, if you'd like to see more contents like this, make sure to click the subscribe button and leave notification buttons on for this channel. And don't forget to join our Discord if you'd like to discuss a bit this more. And let's move on towards technical analysis. Now, on the technical analysis basis, SoFi has actually had a bit of an issues trying to clamp on above the 50 SMA. And you're seeing that to be a massive resistance currently at the 1229. Now, 30 MA is above the 10 SMA, so it's still seeing a bit of resistances there. The average directional index is showing that there's not much of a trend either way, but it is a bit going towards closer to a downtrend that really started on the 2nd of March. So we're kind of 2 weeks into this one. The million percent R, which is very similar to the relative strength index, shows a highly oversold kind of situation, which basically suggests that there's more supply than there is a demand. And once that kind of starts equating to one another, you will see a bounce in price. Now, MACD histogram, that's showing to going on the negative side, so not really a good look for this one. A bit more causing anxiety for some, but it's definitely going on towards the negative side, and momentum is going negative, 1.27, decreasing again. So it's a bit of a worrisome level for a lot. Stochastic fast and stochastic slow are all dipping downwards, suggesting that this is not done bleeding. And the moving average bands and the Bollinger bands are all going downwards, and almost a very strong downtrend. So it doesn't bring me joy, of course, saying that. So first, we're going to take a quick look into some resistances and supports. 852 is the first support. Resistances are 1240, 1480, 1673, 1867, 2143, and 2495. And you're seeing some price line action. So 852 is definitely the first support. Resistance 884, 961, and then you're seeing 1065, higher to 1158, going higher to 1230, and then to 1293, higher to 1368, $14.48, $15.51, $17, $18.60, $19.31, and $20.19. Now, if we were to go ahead and take a look at an hourly perspective, we start seeing this downtrend. And the downtrend actually extends beyond the 1 month, but for the time being, we're going to be only considering this downtrend here. And it's currently on the lower channel. I took this as an outlier as it's in after hours where it jumped to 1381, but it does appear to be more of a downtrend, and it could be a bit more short term because we had spikes to this downtrend. But in all reality, it looks like there is a little bit of a plateau to the rate of growth percentage-wise year over year. Even though their net revenue is increasing, their adjusted EBITDA is seeing a bit of a turbulence, and it's mainly towards them acquiring different other companies and their business strategy, but they're still hitting the first ever positive adjusted EBITDA. And the market's basically reaction to that hasn't been as positive as I would hoped, but I think this one is for a long term in the books, but we'll see some lowers levels, perhaps at the $8 sharp or maybe a little bit lower before it starts gaining a bit more momentum and a bit more interest in retail once again. What do you think is going to happen here? Make sure to mention down in the comments below. Share, subscribe, and like it. Have a wonderful day.